Let's take a look at your market news now. Asian share markets firmed this morning as signs of progress in the China-US trade standoff whetted risk appetites, though investors remained wary of the damage already done to the global economy. Figures from China underline the pain felt as dollar-denominated exports and imports both fell by more than expected in September. Liquidity was also lacking, with Japan off and a partial market holiday in the United States for Columbus Day. Sentiment had been boosted when US President Donald Trump outlined the first phase of a deal to end a trade war with China and suspended a threatened tariff hike, though officials on both sides said much more work needed to be done. While Japan celebrates their Health and Sports Day, markets are closed. The Shanghai Composite is up 1.2% at 3,007 points, while the Hang Seng has moved 0.85% stronger, climbing to 26,530 points. US stocks ended more than 1% higher last Friday, but below their session highs after the announcement of a partial trade deal between the United States and China. The Dow Jones Industrial Average rose 1.2% to 26,816 points. The S&P 500 moved up 1.1% to 2,970 points, while the Nasdaq Composite added 1.3% to 8,057 points. So many numbers. Let's go to the Johannesburg Stock Exchange and take a look at more of those. Arabile, what's moving the markets this afternoon?
Good afternoon, Nzinga. Well, it seems that there's quite a bit, and it's all about phase one then of that trade negotiation and what Trump is calling a trade deal signing when it comes to phase one of the trade deal. Yes, we saw trade talks, of course, come to the fore last week, Thursday and Friday, and it seems to have ended in a positive sentiment. There will be a few concessions made when it comes to currency, agricultural purchases as well. So certainly boding well for the greater picture when it comes to the market picture. As you noted there as well, there was some positivity when it comes out of the Asian markets, even the United States closing a little bit better off last Friday. Today, however, for the local exchange, not necessarily doing as well, around 0.8% weaker. So exactly how things will fare and what exactly the market is perhaps taking in is a key question at this point. So not necessarily positive sentiment, just hanging on to that 55,000 point mark for the all share. Let's take a look at exactly how those numbers are looking right now, starting off, of course, in Europe and then onto the local front, and we'll unpack the detail in just a bit. Well, 14.79 then against the US dollar is the state of South Africa's currency. So that's what's moving things along now and looking pretty good on that front. Let's unpack it now just a little bit more. We're joined, of course, by Chris Gilmour, independent analyst right here at the Johannesburg Stock Exchange. Chris, thank you so much for the time. Appreciate it. So 14.79, 14.80 odd against the US dollar. A really good mark then for the local currency. Just Asia? Just the Trump situation? Is that what's happening here?
That's predominantly what is moving markets, and particularly the US market. As you rightly say, Arabile, there's been an awful lot of talk over the past few weeks. And the 15th of October, that's when they're supposed to be sitting around the table and getting together. And they got together a bit earlier than that. And on Friday, there was a lot of euphoria about, as you rightly call it, phase one.
Yeah.
The truce. It's been called all sorts of things. It's certainly not an end to the situation. But it may be the end of the beginning, as Churchill might have said. It's going to be a long, drawn-out, protracted situation. As I think I've said before, the Americans see trade as a weapon. And they will use it in any which way they can, with the Chinese, with the Europeans, with the South Koreans, with the Canadians, with the Mexicans, you name it. And this, I think, the Chinese are kind of being, they're playing along to an extent. But, I think what they're doing in the background is that, for example, they're turning out something like 20 million IT graduates a year.
Sure.
So it's not difficult to envisage a situation in the not too distant future when Chinese IT companies more than rival the likes of Google and Apple and this type of thing. So they're going to actually dominate, and they're doing all the background stuff right now. The Americans have to be a little bit careful. If they go too far with the Chinese, they will put them into they'll force them into a corner, as they tried with Huawei. And what the Chinese will do, they'll what's called reverse engineer an awful lot of Western technology.
Yeah.
In other words, extract how it actually works by reverse engineering it, and then put it on as their own. And that's precisely what Trump doesn't want to do.
Yeah.
So, as I say, he's got to go softly, and that's not his approach. I mean, he doesn't understand how you even spell finesse.
He doesn't.
Yeah,
exactly. So the worry then becomes, over the long haul, as we said, this is only phase one. The next phase, number one, he says that it's still going to take about 5 weeks to actually write down the agreement that has actually been put forward. So we don't actually even know the full details of what is actually coming to the fore. So how long does this drag on for? Do we still just think, well, November 2020, when Donald Trump's tenure comes to an end, is perhaps the time when we can look forward to saying no more trade dispute?
Well, you make a very good point, because between now and November 2020, so it's only a year.
Yep.
And so next year is an election year. And the last thing he needs in an election year are, A, to be bogged down in a war in the Middle East. And so we see what he's done with Turkey and this type of thing. He doesn't need to have an ongoing trade dispute with China. So already, for example, you see American farmers under the cosh, so to speak, because of what's been happening with a lot of these trade tariffs. Interestingly enough, as part of this deal, the Chinese are going to buy an extra, I think, $60 billion worth of American agricultural products.
Yeah.
So I think there's some relief on that front. So Trump is obviously trying to be a little bit clever with this. He's trying to buy time, I think, ahead of the US election. So it wouldn't surprise me if you get a lot more in this type of vein between now and November next year.
Yeah, and any small win sort of looks good on his book, right?
Yes.
And it certainly does bode well. The market is headed a whole lot higher. The jobs numbers are obviously great as well. And then you get a win against China, no matter how small, you begin to really look good on that front. Well, that's going to be interesting. I wanted to talk as well about the Brent price and the Brent crude oil price. And then now sitting at around $59.30 a barrel. It's down 2%, effectively wiping out everything it gained last week as well, which is the first gain in 3 weeks then. Where is that Brent crude price hitting? I mean, yes, we saw the Saudi oil facility get bombed a little bit earlier in September. That's completely faded away. Yeah. We saw the price touch 70 odd very quickly and go completely down. Is this the new normal? Just below $60 a barrel?
I think so, and maybe even a bit lower. You see, don't forget that there are a lot of other dynamics at play here. So when, as you mentioned, the Saudi installations got bombed by drones or cruise missiles or whatever actually did the damage, you immediately took 5% of the global oil production out of the equation, but it was replaced very, very quickly, and that's why the oil price came back rapidly. But in a broader sense, in a bigger sense, in a top-down view sense, don't forget that the Americans are now, if you include liquid petroleum gas as oil, they are now the biggest producers of oil in the world, bigger than Saudi Arabia. So as long as those shale oil producers in the US can keep on producing profitably at or around these levels, then it's going to put a cap on the actual price. The other aspect is that we don't see it in South Africa because we've got precious little in the way of electric or even hybrid vehicles. But in the West, and in the US particularly, things like Tesla and many other manufacturers, I mean Volvo, for example, will stop manufacturing internal combustion engines in 2025. That's only 5 and a bit years away. So that is going to take away an awful lot of demand for petrol and diesel and stuff like that. And trucks. I was chatting to a guy last week at this conference they had on the JSE. He is importing, and it's from India, electric trucks. And so it's not just passenger cars. We're talking about big, heavy-duty vehicles.
Industrial manufacturing.
And so that is going to take away a lot of the demand for oil as well.
Yeah, so even, as you said, it could certainly head a whole lot lower, which could be a good sentiment for South Africans, of course, when it comes to the petrol price. But overall, though, it may not necessarily bode too well for the market. What becomes the alternative then? What happens to Brent crude if it goes on to become, I wouldn't say obsolete, but effectively priced out of the market almost.
Look, it's going to be around for a while yet, and particularly in countries like South Africa, where there isn't really an alternative, and not a viable alternative as yet. And when you look at things like aeroplanes, there isn't an alternative to aviation fuel. No one's designed an electric plane yet,
Yes.
and that's far off. So it's certainly going to be around. I think it's going to be a kind of gradual, and I hate to use the expression flight path, but it is going to be a kind of flight path, call it a roadmap, whatever you want to call it. But I
Not
think
trusting Boeing with this flight path.
not trusting Boeing, not with the 737 MAX, no. And I think it's going to take a bit of time. So it's not going to be any kind of overnight sensation at all. But I think there's definitely a cap here. 59 to 60 or thereabouts. It'll get the odd spike from time to time when you get geopolitical nonsense.
Sure.
But it could even go significantly lower. Don't forget there's an awful lot of agitators out there in the form of Extinction Rebellion and organisations like that are campaigning for far, far, far reduced usage of carbon products. So you put it all together, it's not a particularly rosy outlook, but it is going to be around for a while yet. It's not like it's going to go away in the next 5 or 10 years. You've got another 25, 30 years at least.
To just make sure you catch up at the very least. Very finally, what is it that you're perhaps just looking at, that you're sort of excited about over the next week or so, market-wise?
Over the next week or so, well, there's not much in the way of results. We've got EOH coming out tomorrow.
Yeah.
Adapt IT coming out tomorrow. Adapt IT I think should be quite good. I missed the trading statement. EOH, hopefully we're looking at a bit of a turn there at long last. I've been saying it's going to turn for a while. I've got a lot of faith in Stephen van Coller and his mates there. I think they're doing a good job. And then next week we've got companies like CarTrack, we've got I think we've got Altron and Calgro M3. So a few more companies coming out and Altron I think will be another excellent set of results.
And we'll see how Mteto Nyati is certainly doing on that front. Thank you so much for the time. Really appreciate it. Chris Gilmour, the independent analyst, helping us unpack that market picture. Well, certainly even in the United States, third quarter earnings is set to come out. It's expected to be the worst in around 3 years or so, around 3.2% down when it comes to the earnings picture out in the United States. Whether that will certainly be the case, however, and how that will drive the market picture is something we'll continue to unpack for you right here, of course, on Market Sense. Live from the Johannesburg Stock Exchange, that's where the buck stops this afternoon. It's back to my colleague Nzinga right after this. Do stay tuned. This is On Point.